John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome to the show. Sorry we had a little bit of a technical issue to start out with. My infinite wisdom of Skype seems to never stop amazing me that I don't know how to use it properly. And we're back on the right track here now. So thanks for bearing with us. And you guys probably or may have some questions since we had a big, massive sell-off between the last time we spoke, which was pre-market yesterday. And we had talked about some Brett's situation, still positive on the long term, but during the day yesterday, we shifted gears tremendously. And we had that 240 crossover happen on the 24th. And we talked actually, I think when Tom was on the phone calling in yesterday, we talked about the 240 crossovers. We've talked about this before, pretty powerful. We've got automated systems that run on those 240 crossovers, but we also talked about, you know what, the big crack hasn't happened, but during the day, our daily Brett did cross over yesterday on the 25th, and that happened about the time we were getting into this inflection point around that 2068 area, which we actually had pre-market. The unfortunate thing about doing pre-market shows is you don't, well, it's a fact. You don't know what's going to happen during the day after you do the pre-market show, but things can change, and those things that can change are this little doohickey up here, which I've discounted that by calling it a little doohickey. It's actually a lot going on behind these particular summation of internals, and so that's kind of and to be honest with you, we kind of had a little bit of a DMZ between when we talked about this, between 62 and 68, 2062, 2068 on the June contract. And to be honest with you, without this crossing over, I would have been really inclined to pick a battle there. But because we had some gears that were shifting on the Brett situation, it kind of tells you that it might not be a good idea to pick that battle. But again, I will stand by that little DMZ wasn't a bad spot to pick a battle 63.50 and a 68. I thought that was 62. I apologize for that. So, but that's what stops are for. If you're going to play that game coming down in support, market's been relatively strong, kind of been Teflon coated as usual, but everybody ran for the door at the same time. I don't have to tell you that. This is not the Monday morning quarterback show. We're trying to figure out what to do now. But it's actually a good primer if you're going to do, pick the battle on the pullback and wait patiently until the market comes to you. We talk about that a lot, and we're going to talk about that and relate it to the euro in just a second. There's just, picking the battle, putting the stops in, taking the medicine if it's wrong, and moving on. I mean, you're never going to win every trade. You know that by now. So, but the breadth, I was looking at it when it happened. I was like, something doesn't seem right here. This is kind of rolling over now on the intermediate, and kept me out of a little bit of trouble yesterday during the day. Didn't really take advantage of this sell-off like I wanted to until we kind of came back and retested that area. And I'm just going to kind of revisit some of the action. We actually talked about, and just to stay focused on the S&Ps, we talked about, I think when Tom was on the show, we actually kind of bantered about this a little bit. We talked about we had to get back above 2088. Had to get back above to get into the long mechanism, and if that didn't happen, you had to kind of wait patiently until we gravitated to lower numbers. But the breadth had changed there. But as you can see, we kind of got below that 240 profile and never got back above that 88 area. So thank goodness for that. And a lot of people, they look at some of the things that I talk about and say, and they go, well, why are you waiting for it to go higher to actually buy it? I thought the whole premise was buy low, sell high. Well, sometimes you want somebody else to try to figure out where the bottom is and then get conviction in the case of longs when it goes higher and gets kind of clear and clean above some areas that were relatively iffy, I guess. This is a good example of that. And, kept me out of some trouble yesterday. A lot of guys got hurt yesterday trying to mess around with day trading and going long here and there and not having stops in. That's how you get hurt. Want to just throw some numbers out there before we go to break, because some people might have some questions. 877-927-6648 and internationally 727-445-1044. Because I'm sure there's some questionable instruments out there right now. And what do you do with some of these pullbacks? Buy or sell? We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're taking a look at crude oil and that 48 barrier. This is the May contract. You know, we kind of played that game the day before yesterday and kind of pulled back, and we talked about, you know, maybe that's a lid. We got to get through that 4803 area. And I was looking at a lot of the XLE type related stocks and looking at them like, okay, they're in a little bit of resistance mode here. And wow, was I proven that barrier was to be broken. So the close above, and then we've had some massive moves this morning. So again, that's the big area now. Let me just get rid of this. Okay, so the big area 48. Now we're going to take a hard look at that. Coming off a little bit right now, back down into 50. Remember, the big time resistance is around 54.20 now. That's the next stop up. Let me turn off my Skype here. Hold on 2 seconds. Let's get rid of this. Okay, sorry about that. And as we look at crude oil, what do we do now? So that's the question. That's the daily situation. We've been as high as, you know, getting into the 53 area. Here's the 240s. Do you brace yourself for a pullback on crude oil already? I don't think so. You know, we're breaking that 48 barrier. This is the 47.38 area on the 240s. We talked about this yesterday, looking like it might have a little bit of a cross to bear to get through that 48 area. Well, that happening, we definitely had a close above it, but we don't have any 240 information appearing up here yet, and we really can't bank on anything or bank against anything on the short side. So I think you need to just, you know, you got the Saudi situation going on right now, and I don't think anybody needs to step in and be a hero until we get possibly up into that 54.20 area. That's the next time you can take a shot on the short side. How's the XLE acting in relation to this? Let's find out. Pre-market, I don't know if this is a real tick. I don't see how it could be, but maybe it is. Maybe somebody can let me know about that. Going past 81 and coming back to 78.5. Maybe. I don't think they break any trades over it though. If it were real, that used to really. Oh my goodness! Have you guys ever had that happen? Has anybody ever had it happen where they're gonna break a trade, or not? They had broken a trade that you actually had big time profits in on a wildly trading stock. I don't know if you have. Maybe you can let me know. That's a bad feeling when that happens. Here we go. So here's the XLE, 76.19. We talked about consolidating above there, but we also talked about crude oil possibly being at resistance day before yesterday when this was happening, and maybe this wasn't a pullback to buy. And again, that was not the best call in the world that I made on that, because I thought crude oil was going to go down. But the worst thing is you just missed an opportunity here. I wasn't a big fan of buying that, actually. So again, it was like a no trade, if you can look at that as a bad thing. All right, let's take a look at a couple of internals here. Let's just see if ExxonMobil got out of its own way in the middle of this, trading up to 86 and some change right now. So what does that mean? That means we're actually breaking above daily profiles. We talked about this not being the best candidate for a runaway freight train on the north side. It's back up to resistance around that 86, 96.95, 87. You know, that's going to be something to take a look at with a pretty hard look on the short side. If we get up into that 87 area, again, you got way better candidates to look at from the long side, in my opinion. Let's look at APC. All right, here we go. Got resistance on the weeklies and the dailies about the same range. We're trading right now 82. Let me just blow that up. pre-market looks like 82.5 approximately. So again, we got resistance at 83.49 and 82.70. So you get about 70 cents range here. Looks like, again, oil may continue to climb higher. So I don't know if you want to kind of take a look at any of these from the short side, but you've got some serious resistance there. And if you have been long APC, you might want to just take a hard look at least taking half of it off. All right. That's a couple of energy stocks. Let's go into the XLF here. Finally, it took a market sell-off of 400 or 500 points to do it, but here we go. 24.47. We talked about banking against that from the short side, and now we've gotten below profiles, and maybe this thing will come unglued now. And you got the notes and the bonds killing the spread again on the yield curve. So let's just take a look at that relative to this, and let's just see where we're at and see if we got any juice left in this. Here we go. Here's a 10-year on the June contract. What do you do with this now? I don't think you short it. I don't think you short it. All right. Here's the situation on the weekly. With all the things going on, and now people seemingly getting a little nervous, this thing could climb higher. You got targets above 130.20 on the 10-year, and I think you got to just pull up our 240s. A little bit of a regulation system here on the 240s on the way up. I mean, we're getting a little bit tenuous here, starting to trade below profiles. We've got an orange bar appearing on our daily, which means we may have a new profile appearing on our daily new supply area up top. But I'm pretty comfortable staying long notes and bonds right now, actually. And did gold go past 1,200 or not? Yes, it did. I meant to say, or what? Here's the April contract. Let's see here. Hold on 2 seconds. All right. All right. So what do you do with it now? We got above 1,200. That was kind of the pressure valve. It had to get through. It got through it. I was not participating in the rest of that trade after that, except on a very, very small amount of contracts. And I actually left some mini contracts on just to let you know how scared I was that it wasn't going to go up. Here we go. Here's the 240s. You don't have a lot of reasons to short this right now. All right. It may come back and test 1,200, and that will be, in my opinion, a good buy point. And you've got the top of the box on the 240s a little bit lower at 1194, 1195, but 1,200 I think could be like a pullback and possible buy point on gold right now. I wouldn't do a lot between now and then. It'd be hard to kind of buy it up here. We got to take a look at the DAX. Very euro-related repricing type situation. Euro's kind of plowed through some resistance it was looking at and finally broken out above again. The dollar's kind of hanging in there, but the DAX really, wow. Did it have some technical damage or what? Here we go, 11,750. Trading below there now. Actually trading about 11,700. All right, let's go into the euro and the dollar. Let's look at the dollar first. This is something that, and I'm going to just pull up the daily here first. We kind of didn't we got back above, closed above, and then we just kind of broke my heart and started trading below this 99.23 area. But we talked about waiting patiently until this thing got down into another big time inflection point. Well, we're there now. And that inflection point we've talked about is 96.47. We've reached a low, I think, of 96.31 or 32, so we've satisfied that already. I'm relatively comfortable picking a battle right there on the long side with stops below that area based on my appetite for risk. And inversely, here's the daily on the euro. We kind of poked our head above, made some, just to do it, made some new highs, got into that 110 area. We talked about waiting patiently for this. If we're going to do this to get up into a maximum shorting area of 112.49, I think the economic data may put a little bit of brake system on that right now. But again, I don't think you short the euro right now. You got to wait. And maybe you'll get, if that 112.45 area is not hit, you may get some new profiles here on the daily. But remember, the dollar is at support right now, in my opinion, and that may cause the euro just to kind of calm down a little bit and rattle around here in the 109 area, 109, 108. The yen, we got to take a look at that. I'll take a look at Apple in 2 seconds. I just saw that. Apologize for not seeing it earlier. Here's the yen situation. Again, having that breakdown, got back above that 120.49.50 area, and then just complete reversal. It's a nerve-wracking situation to trade some of these now when they're in flux. Remember, these currencies have just trended beautifully for a long time. When they stop trending and you're trading the trend, it's okay to get hurt a little bit. Make sure your stops are in. You know, let somebody else pick the tops and the bottoms. It's always been my opinion to just kind of keep turning the wrench the same way until somebody tells you differently. Don't overthink these things. All right, we'll take a look at Apple now. All right, so we got 122.42 sitting right there, and we also have 122.24 sitting down there. I'm still okay buying this on the dips on Apple. You know, the S&Ps, we may have a little bounce here based on what we just looked at. Apple, if you step back and look at Apple from a 30,000 foot view, what would you say here? Would you say that it's probably a high probability, high percentage shot to keep buying support on Apple until you just really get some breakdowns and put your stops down below? Yeah, I mean, I don't think that's a bad idea. I mean, is Apple due a pullback? Has there been over exuberance in this particular stock lately? Probably. Do the fundamentals of this stock really shine? I think so. And if you get a gift down into 122.40, that general area, 122.5, I wouldn't mind picking a battle down there. I don't trade Apple, but I wouldn't see that as a low percentage trade, especially if you can put the stops in and then get back in again if it elevates above that area. Even if you do get stopped out, that's my take on Apple. I don't have, I'm not an Apple freak. I don't have any Apple products except for some of the ones that the programmers are using. So I don't get the rich, involved experience in Apple products, and so I'm just looking at it relatively objective right now. Okay. All right. Something else, you know, dollar denominated, whatever. We're going to take a look at November beans, and I'm a big fan of trading the grains, as you know. We never got up to that sell point that I wanted to see at 973, but what do you do now? Some guys were sending me, you know, some emails about this. We're pretty much like almost in an intradable situation here on the dailies. The weeklies, you've got this 949, 950 down below. And again, you know, what do you do with this? I think you got to wait till all this gets cleared. And that means also waiting for the 942 area to get cleared on the short side. I'm a big fan of this thing continuing to sell off long term. And if you're going to trade some short-term numbers, here's the short-term numbers, kind of just selling off the 960s and putting the stops above. All right, let's take a look at July wheat. Here's May wheat, and let's take a look at July wheat. All right, so here we go. You know, what do you do with this? I got a reference. I got to do something else here to really. We'll look at July corn at the same time here. All right. I haven't looked. Let's see here. $4. All right, let's go back to wheat. July, corn's obviously kind of still in rally mode. July wheat's pulled back. I like this setup, actually. I like this profile appearing as we were kind of having price action trading above. Here's the 524 area. I don't think this is a bad area to pick about on the long side. I love how this thing kind of had the technical damage on the upside and then pulled back into that unfair high. This is actually a pretty attractive trade. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Got about 4 minutes left here, and the S&Ps, it's kind of coincidental that we're kind of meeting recent lows at the same time that we're kind of at the bottom of a profile here. Are we due a bounce? I don't know, but you've got an inflection point there to pay attention to try to trade some bounces. Is this going to hold up? In the past, actually, we've had a lot of situations like this with the S&Ps that they have held up when they come into these kind of double bottom situations, if you will. Well, I'm calling this a double bottom. It's not really a double bottom, but I think you get catch my drift. But what do you do with this right now? Let's just keep drilling down into the time frames. You don't have a new 240 down here, which kind of, I use the word sucks. If you're going to try to pick a battle alongside, you really want to see some help on another time frame. You also kind of got this staring in your face right now. Those are not nice situations to try to buy bounces. And to be honest with you, this could easily explore more of this fair auction on the weekly. So, do I think you need to back the truck up right now on the long side on the S&Ps? No. Can you trade a little lighter and try to pick a couple of battles around that 2040 area? Yeah, that's probably worth looking at. But if we break that area, that inflection point, and especially close below it, you might start seeing the 1980 general area again. And that would be something to super pay attention to. So, again, don't have a lot of cooperation here. Daggone it. I hate it when... Just lost everything. Hold on. Nope, gonna have to pull it up this way. All right. Just make sure you guys are seeing this. Okay, I think we're back. So that's my take on the S&Ps. Okay, get a little bit of a bounce here in the dollar off that 96.5 area we talked about. I don't know if that's going to sustain, but here's the situation we were just literally talking about a while ago, and the euro is probably acting accordingly relative to that. Let's just take a look at it. Yeah, I mean, and on the euro, like, what do you do with it? I think you got to sit tight with this and wait for another profile at this stage, or we're going to get up to this 1245-ish area. And then I actually fully believe you could back the truck up on the short side on the euro if we do happen to get into that 112.45, 46 area. That is going to be a very attractive situation. And what is that based on? That's based on that weekly unfair low and staying with the trend and the mechanisms to trade this continually down. It's not going to be a clear sailing, easy ride, but waiting and being patient until those things come to you is sometimes pretty much super in order. All right, we were looking at okay, we got about 30 seconds left here. We're going to take a look at healthcare. And this is something that we were kind of talking about that was hanging in there, so to speak. And we were talking about that. We had an orange bar up here on this. Then we talked, it's going to have a new profile, and you got to wait patiently when you see that. But now you've gotten right down into the top of the box here, 72.70. I think this might be, I don't like the quick turnaround with this, but this might be a chance to pick up some shares here with some stops below on the XLG. Thanks, guys. Pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.